Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. Let's run the numbers. Bitcoin is currently up 3.42% to 23,726. Ethereum is up 4.20% to 1643. What happened inside the markets? The Fed press conference and the federal funds rate decision was very positively taken by the market. And we can see that the SPDR S&P 500 ETF Trust, or the SPY, bounced really strongly off smart money buy support levels. As expected, the federal funds rate increased by 25 basis points. The next FOMC meeting on the 22nd of March is already registering a 14.4% probability that the federal funds rate doesn't move anywhere, it just goes flat. However, the more major probability is an 85.6% probability of a 25 basis point increase on the 22nd of March. One really good thing to keep your eye on is the DXY. When we were looking at the DXY yesterday, and this is before the JOLTS job openings report and of course the FOMC decision, we were just here. We were just trundling along this smart money buy area and then we lost it. Where did we go to next? We came down to the next smart money buy area and price tended to consolidate. It tried to reach back up to the previous smart money buy level, which turned into a smart money sell level but failed. And what happened next? We saw this big gap in between these smart money buy levels, and what did price do? It actually, with the DXY, it fell down to a lower one and then bounced. It's currently 101,173. These smart money buy and sell levels give you market structure. Without them, it's really hard to understand where price could go. But with them, you get a much better idea where the support and resistance is inside the market. And of course, the thing to always understand with the DXY, as the DXY is currently coming down, this is just the market structure at the moment, the major indices love to rally. How did gold respond? It responded really well. We saw that previously gold was in a smart money accumulation zone. And then what happened? As the dollar sold down and basically collapsed down, gold spiked up. But where did it spike up to? It didn't just keep on going up forever. It hit a smart money sell level and it's trying to get through that right now. Gold is currently 1966 and 80 cents, above that 1940 level. Well done, gold. In the main markets, in the last trading session, and Masterclass students, you get my live chart and a deep explanation of all of this in TM6. We saw the VIX continue to come down. The fear is definitely coming out of the markets. The question is, how long can the fear come out without a bit of profit taking to occur? We saw with the NASDAQ 100, it just kept on rallying. As fear's coming out of the market, the rallies come into the market. When fear comes back into the market, the rallies go out of the market. Just to be aware of these things. And what do we see with bond prices? Bond prices look to be breaking down, but they said, oh, okay, the Fed's actually going to do what it said it was going to do. And they restored their previous upthrust here. And we can see bond yields are continuing down. What about gold? Gold struck off that 1940 level and is currently higher on the gold futures. And what happened to the DXY? The DXY did mean revert and then it sold down. What about oil? Oil is just flatlining at the moment. And when we look at junk bonds, the risk on indication inside the market, that's pretty risk on. We're seeing a lot of people return to the market and say, oh, I feel safe now. I feel certain the price will go up. If you're solely and wholly in the stock market, you should definitely be looking at Bitcoin. Bitcoin in many ways acts like junk bonds. It acts as an indicator of risk-on sentiment inside the main markets. And of course, Bitcoin cannot escape the stock market's gravity. But when you use that in reverse, you can actually get a prediction on the stock market's direction. It's not easy to do, but when you're in synchronization, you can definitely do it. Now, why do I have the Wall Street Journal headmast up here? Because it shows something really, really interesting. Let me just zoom that in for you. What about this? Wall Street Journal. We can see the Dow Jones Industrial Average, S&P 500, the Nasdaq, the Russell 2000, the 10-year, the VIX, the gold. Hang on, what's this? Bitcoin. That's almost like Bitcoin is a mainstream thing, like treasuries and gold and crude oil and the major indices. It actually is. A lot of people are sitting on the sidelines saying, I don't know if I should get into crypto. What do you think the Wall Street Journal is telling you by including Bitcoin on the front page of the journal? Please let me know in the comments. And of course, we always go to the source. So if we go to the Wall Street Journal, click on the headmast here, and what do we see? Yes, exactly. Oh, those pop-ups are so annoying. But the concept is you've got the major indices, the treasury bonds, treasury yields, the VIX, gold, Bitcoin, and oil. This is actually telling you something really, really important. Bitcoin is now here to stay. And a beloved community member actually pointed out that BORSOG is just sitting on the shoulder of Jerome Powell. And we've already looked at this particular one. Central bank signals another increase likely next month. We already understand that there's a 14.4% probability that they don't increase it at all. Bitcoin is currently trading at 23,733, and one of the interesting things with Bitcoin, we've got this smart money support below around the 23,300 mark down to around the 23,200 mark. But where is the next resistance? Oh, I'll tell you in a minute. But before I do, you may have seen this tweet by Michael Burry. He had one word. It was sell. And that was actually done before the JOLTS job openings report and the ISM manufacturing report. This is this line here. And he said sell. And we did get a bit of volatility inside the market. But as the markets rallied, where did Michael go? He kind of deleted his account. Again, Michael, stand by your decisions. I think it's important to, if you feel a certain way and you feel strongly, you should probably feel strongly for a very, very good reason. And what Michael's trying to point out, I believe, is that what is going to happen in market, a lot of people will gain a lot of confidence, and I believe the prices can drive higher from here. And where would we see Bitcoin's price going up to? I'll show you. Look at this. We've got a lot of fresh air all the way up to 25,400. So we could do very, very well in terms of market structure. And the other thing to bear in mind, we do have support underneath as well. But the concept is prices always moving in a wave, and the markets do like to set people up. So have your three-dimensional thinking playing out at all times. And going back a little bit, I just want to show you a couple of very, very interesting things. I've just put these specific economic releases out here so you can gain a better comprehension of how the market moves when it gets certain pieces of economic data. Please let me know if this approach is helpful in the comments. From the front page of the Wall Street Journal, you'll notice this particular chart. And what we're seeing here is that the federal funds rate has increased at the greatest percentage rate ever in history. It wasn't like this going back in 2005. It wasn't a gradual, steady increase. It's been a monumentous one. The gradient, the slope of this particular line is quite sharp in comparison to others. But we're still expecting a 25 basis point increase next month. one of the things that we have to understand about this, these percentage increases are all about demand destruction. The Fed is seeking to destroy demand to bring supply and demand back into balance with one another. Talk about using a rocket launcher to turn a screw head or something. It's just a really crazy thing to do. But this is the problem with basic economic, macroeconomic policy. They're very, very limited. Governments are very limited as to what they can do because they limit themselves. If they wanted more methods, they could create them, but they choose not to. But anyway, getting back to it, what we actually see, demand destruction, is about taking the heat out of prices within the economic system. And there's no better way to do that than to increase the unemployment rate. But what are we actually seeing with job openings that came out here? We're actually seeing job openings are starting to rebound. The economic system is hiring people and the unemployment rate is actually going down. What does this actually mean? And I think it's what Cassandra, Michael, why do you call yourself Cassandra? Okay, there's probably a good reason, but I don't know what it is. You should call yourself Michael. The concept is that the Fed is trying to get the unemployment rate actually to go up, but it's not going up. And I believe Michael understands this, and he's saying it doesn't really matter. The Fed has a policy where it has to take the wind out of the economic sail. And there's going to be volatility inside the market. We've said many times that 2023 is likely to be the year of the trader and the year of the investor. It will be quite difficult to invest in this market, but there will be so many trading opportunities. It's often important not to get just too caught up in what happens in a 24-hour period. This is why I think that Michael shouldn't have deleted his account. He should have just stood by his position, because there is very good reason to understand the turbulence that could be incoming. And when we look at the job layoffs, look at these layoffs. They're increasing. Layoffs and discharges and new job openings, they just slightly increase, but the layoffs are right there. And if you go through the news headlines, you'll see this company laying off 10% of its workforce and this other company laying off X% of its workforce. It's real. It's in there. And I think that's what Michael is trying to point out. There'll be a lot of retail traders saying that Bitcoin is coming up to this short-term resistance. And it's true that that is very short-term resistance. It's actually so short-term, it's from 3 days ago. Bitcoin has been trading for over a decade, and when we look at the real market structure, and this is why you've got to be careful of just looking back and saying, oh, that's real market structure. It existed 3 days ago, so therefore it's carved in stone. These are the areas through the CTKS method and Stanfield levels and Stanfield zones that actually give you the real market structure. And these are formed from all of price action. We can see these particular zones here, they're highlighted just to give you a bit of a band, an understanding of where support or resistance could play in. You notice the price was above this particular band here. What does that mean? This band is a smart money buy level. If it holds, if it doesn't hold, we can expect it to go down to the next smart money buy level. What about if it goes the other way? If it comes down to a smart money buy level and it goes up to a smart money sell level, this is kind of what we expect. We expect price to bound between these smart money buy and sell levels. This is why it's really exciting to see that the next smart money sell level is all the way up at around 25,400. This is a wonderful thing because we could get a bounding between this smart money area, this zone at around 23,000, say 300, up to the 25,400. That could make quite a lot of people very, very happy. One thing that we're always doing, we're always aware that price is always bounding between these particular areas. Price to come down, touch this particular 23,000, say around the 23,300 mark. would be very, very positive. It just is a breakout, a retest, and potential confirmation of an uptrend. When this kind of thing happens, when people see that it's coming down, they say, oh no, I got it wrong. And they tend to sell around the support level, not knowing that it's there. And this is one of the reasons you need to know the internal market structure, not just after what happened 3 days ago. 3 days ago, yeah, that's pretty interesting stuff, definitely. But that's not going to cause institutional investors to come in or out of the market. This is the massive difference between retail and institutional thinking. Retail thinking says it's all about this particular hump. It's not about that hump at all. It's all about objective dynamic market structure. It's all about marking up all of price history and knowing where the true support and the true resistance lines are. This can literally be a total game changer for you financially. Moving towards the longs and the shorts, and Masterclass students, you get my live chart in TG34. We can see that there's been a series of massive short liquidations in terms of what's going on, but the shorts are actually coming into the market as well, and it's increasing at a decreasing rate. You can see the longs coming out of the market. It's always the case that the longs and shorts are always liquidating each other. It's not 100% short and not 100% long. It's always a mixture. So let's check that against the statistics. And what we see in the past 24 hours, there's been $106.35 million of liquidations across, this is really low, 44,160 positions. That's not a lot. And when we look at liquidations across the past 24 hours, about 64% short. What about the past 12 hours? 70% short. What about the past 4 hours? 83% short. And what about the past hour? 89% short. But when we look at total liquidations, what we actually see is that it's really not a lot comparative to big days like this, where that's not even a big day. We're talking about sort of over $500 million worth of liquidations. We're getting tiny liquidations, but look what it's done to the market. And this is why you need to bear in mind that the market doesn't represent a dollar change. For example, if somebody puts $1 into the market can actually increase $4. It's the way that things go. And I talk extensively about that inside the masterclass. There's so many misconceptions about how markets work. In the last 24 hours, we can see that Bitcoin has come up 2.44%. The greatest gainers over the past 24 hours, optimism, feeling very optimistic, up over 25%. Fantastic. No doubt. You're feeling optimistic for a reason. Arweave up nearly 19%. Synthetics up 17%. Loopring, DYDX, Atom, Render, and CVX all doing really well. The greatest losers in the top 100 over the past 24 hours. Leo, Dodge, GUSD stablecoin, USDP, Pax Dollar stablecoin, BIT, USDT, Tether stablecoin, Binance USD, BUSD stablecoin, USDC, Circle stablecoin. Oh, we're seeing this again. We've actually seen this 3 times in a row. Twice over the past 2 days, stablecoins were in the greatest losers. And then 3 days ago, stablecoins were in the greatest gainers. This actually is very, very fascinating. Keep your eye on the market and draw your own conclusions. Just keep an eye and see what happens in the following days when stablecoins are either in the top gainers or the top losers. It's a bit of a pro tip. It's very, very helpful. We know one thing about Bitcoin's gravity is no alt can escape Bitcoin's gravity. So what do we expect when Bitcoin goes up like this? We expect Ethereum to go up like this as well. What about BNB? Yep, we expect that. What about XRP? Yes, again, we expect that. What about ADA? We expect that as well. And there have been no changes in the top 8. Keep your eye on Bitcoin's gravity. That's this blue line. The blue line is a very, very important gauge to keep your eye on. What about the blue line when it comes to these three things? What are these three things? They're stable coins, and they're not stable, are they? They're not stable, and they never have been. Let's turn towards the next 8 or the top 16. We remember that Bitcoin's gravity is pumping at the moment. What do we expect Doge to do? Well, we expect it to pump. What about Matic? Yep, you should be going up. Solana should be going up. DOT should be going up. Litecoin should be going up. SHIB should be going up. AVAX should be going up. And DAI is a stable coin, so we just ignore DAI for the moment. Sorry, DAI. And there has been no movement in the next 8. They've all stayed exactly the same positions as yesterday. We're coming very close to confirming the winner of the Jason Rice CTKS Partial Masterclass Scholarship. If you've reached out and registered your interest in the Partial Masterclass Scholarship, please keep your eyes on your email. The CTKS Masterclass is where I do deep dives on all of the things that actually underpin the knowledge that you require to be very, very effective in the crypto market. First area is foundations, and you can see there are a lot of foundations that you actually need. Then we get into the trend section, and these are all time released. Trend is understanding how things are moving and understanding what moves things as well. Timing is to get your timing correct, and there's many, many ways to do that. And there are some very, very powerful things in here, not to mention your free professional financial advisor. You can become your own one. And then before we buy or sell, we look at real wealth and positive excellence. It's really important to have the right foundations on how you look at life. And then we get into the trigger section. After the trigger section, we have the living video section, and the living video section is just an update to keep you up to date on everything that's happening in market. And it actually includes level 1 and level 2 CTKS Method Standards Certification that's found on ctksmethod.org as well. And I will continue to add to these living videos so to make sure that your knowledge remains up to date. Returning to Bitcoin, we can see Bitcoin is increasing at a decreasing rate. This basically means that the shorts are getting less and less liquidated relative to the longs. Now, does it mean that it's all over and it's just going to come down and collapse down? Unlikely. We've got a lot of good positive momentum inside the market. What Michael Burry is trying to explain to people is just be a little bit cautious. It's a trader's market at the moment. So if you're seeing good profits, fantastic. If it's meeting your target rate of return, there's no problem in taking some of that profit off the table. And always to remember that price is always moving in a wave. It comes up, it comes down. It comes down, it comes back up. It's always moving. So if you've got this in mind, you're going to do really well. And what we do inside the masterclass is layered buying. So we might take out a position close to market action and then layer our buys, hoping to catch some of these long tail rejections. They're very, very common and they're very profitable as well. And always keep your mind, if we go back, say 3 days, we go back 3 days, we see this smart money buy level, it didn't hold, so the next one did, and it reflected it back to the previous one. So a lot of times people really panic when it gets below a buy area. That's also why they FOMO when it gets above a buy area. These kind of things, just keep in mind that price is always rebounding. It's like a pinball, and these are like the bumpers. It's always pinging in between them, and we can see that it was gradually pinging less down to this area and more up to this area. If we get a retracement, that's definitely on the cards, and that's one thing I'm personally hoping for. I'm leaning in to the crypto market at the moment with not going all in and more at this particular price, but just layering in sensibly. And layering in is something that you always want to keep your mind on. Crypto is so incredibly volatile. It's the most volatile asset class on the planet. This can create a lot of emotional turmoil for many people because they crave certainty. And why wouldn't you? It's hard-earned money. You definitely want certainty. But the markets don't give you certainty. So what you need is something else. You need a strategy to profit from uncertainty. How do we profit from uncertainty? We get into synchronization with the market, and that's what this CTKS code is all about. This is your daily three-dimensional risk management code. We talk about it all the time, but in the masterclass it's LV 26.1. The thing to understand and to know here, the market just is a mechanism to transfer money from the desynchronized to the synchronized. You want to focus all of your effort, energy, and attention to getting in sync with the market. That means that you just abandon any particular position you have on how the market should go and just assess the market through its own actions. Well done to everybody who quoted Rule 4, price moves in waves, yesterday in the comments. Well done. That's what it does. Price is always moving in a wave. As a community, we focus on positive excellence because when we get financially abundant, we also want to be abundant in fulfillment, abundant in happiness, and abundant in meaning. Many people set financial targets in life. For example, I want X dollars, whatever the X dollars is. But the point is, who do you become when you get those X dollars? Are you improving each and every day? Are you finding more happiness, more meaning, and more fulfillment each and every day? If the answer is yes, you're going on the right path. If the answer is no, and you say, no, I'm waiting till I get my money, and then I'll look into these things. That's in reverse. You need to do these things first. The money will follow. Fear is a natural response to the brainstem. The brainstem evolved over millions of years, and it's all about the concept of survival. Many people are in survival, and in survival mode, it's very hard to be prosperous because survival and prosperity are two different mindsets. To have an abundance mindset means that we must give up a scarcity mindset. How do we give up the scarcity mindset? One way is through the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness that you say to yourself. Each begins with an I. It's basically saying, I already have all of these things. And you'll see I've done a slight modification to the CTKS Creed to make it even more positive. Let's go for it. I know the universe is designed to make me succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. It's a very powerful thing to just consider yourself as a collection of habits. Some of those habits are very positive and some are negative, and some could be very, very negative. But that's okay. A habit is a habit. It's just something that's been developed over time and you've become unaware of it. To move into abundance, we just have to shed our scarcity habits. Criticism is a scarcity habit. Having a go at other people is a scarcity habit. Thinking that the only way you can win is for another person to lose is definitely a scarcity habit. This world is not like that. Just go into nature. Just walk around in the bush. Walk around in a forest. Walk around and see the abundance of life everywhere. The natural perspective on life is one of abundance and not one of scarcity. That's a human-orientated perspective. Thank you to everybody who watched and commented on yesterday's video. And if you didn't comment, thank you very much for being here and sharing this time together. Francisca said, we start small and scale, and every positive habit makes you. One of my positive habits every day is to look at your daily update, and I'm proud of this to learn and to grow. Oh, Francisca, that's very, very sweet. Thank you, my friend. And thank you, Greg, for your very kind comment. Thank you also to Tim. Tim said, thank you for reporting on geopolitical health risks and how this affects global markets. Nobody else is doing this. Thank you, my friend. I think they're not doing it because you tend to get shadow banned on YouTube if you do it. But hey, I think it's more important that you have the information. And a big thank you to Tiana. We always have something new to learn in every of your videos. Thank you, my friend. And Edwin nailed the price moves in waves, rule 4. And so did Al. Well done, my friend. And John, thank you very much for your comment, John. John said, there's one thing you said in this video that really struck me. The rules will make you. We all need rules, but sometimes those rules should be tailored for the individual. I absolutely agree. There's some rules that are just constant. So, for example, price moves in waves. We know that. That's pretty constant. But you will always have your own rules because your rules match your personality. And we can just think about a personality as a collection of habits. What a great way to look at a personality. That means we can always change our personality. We can always improve because we just change a habit. But this is really good. Thank you, John. Thank you, Kacharia, for your very kind comment. It's great to be in this trader's market after having followed Ken for more than a year and being able to apply the knowledge successfully. This episode alone is so precious, full of wisdom. One positive habit is getting up early and watching Ken's daily episode. Thank you, my friend. Another positive habit is setting clear goals and fulfilling them. I recommend taking time in the morning or afternoon to call out your positive future. For example, like this. Today, I'm going to invite my friend to my beautiful home that I built with this beautiful garden to have a barbecue. Even if you're now living in a small apartment, your thoughts determine your future, and one day you will have your home. That's beautiful, my friend. Beardy nailed rule 4, prices always moving in a wave. Fabs, I know the universe wants me to succeed. And a very special hello to Crypto Badger, to Edwin, and also to J-Link. J-Link says, I'm starting to create some new habits, even though it costs me a bit of sleep, doing bedtime yoga and reading before bed. Ah, J-Link, I'm so proud. Grub's words are very beautiful. Hello, everyone. You are awesome. Have a great day. That just defines our community to a T. And well done to TSB. You nailed it as well, my friend. Well done, CJ, on your market analysis, my friend. And thank you for your very kind words, Stamina. Hi Ken, I think you deserve a really big audience. Blockchain BB on Twitter asked for good technical analysts, and I've mentioned you and the CTKS method and sent your wiki. Thank you, my friend. Tomorrow it's Groundhog Day. Ah, Bill Murray's film. That is quite a good film. And I'm so happy and grateful that we don't have to relive the same day over and over again due to positive excellence. Every day new content to dive into. Let's grow. And a big hello to Blockchain BB. It's so wonderful to share this time together. I just want to let you know how much I appreciate you all. Starting from this weekend, Saturday will be about trading psychology and Sunday will be about positive excellence. And please let me know, is there anything you would like to know about trading psychology or any area of positive excellence that you would like me to focus in on? It's time that we share our positive excellence focus with the world. We could encourage so many people into a much, much happier life. And that's what it's all about. It's all about just creating positive habits. So keep it in mind, Saturday, trading psychology, and Sunday, positive excellence. Have a great day or night ahead, my friends, and catch you tomorrow. Bye for now.